Good afternoon and greetings to our respected lecturer and fellow classmates. Today we are Group 3 and we will be presenting our case study titled Alphabet Inc. Reorganizing Google. This presentation will discuss the strategic reasons behind Alphabet Inc. reorganizations of Google, the structure of the company, and how this strategy has contributed to better management, innovation, and long-term competitiveness. We hope this presentation will provide valuable insights into corporate strategic management practices used by one of the world's leading technologies companies. Without further ado, let us begin our presentation. This presentation is prepared by Group 3, consisting of Nazrah binti Yusaini, Nazatul Fakira Aina binti Razali, Nur Alia Sahira binti Chirani, and Nur Fatiha binti Hamdan.
So for the introduction of the company, Alphabet Inc. is a multinational technology conglomerate headquartered in Mountain View, California, established in 2015 following the restructuring of Google Inc., which was founded in 1998. Google expanded from a search engine into areas such as digital advertising, YouTube, Android, cloud computing, autonomous vehicles, and life science. While this diversification strengthens market leadership, it also increased organizational complexity. So to address this, Alphabet was formed as a holding company with Google as its core subsidiary and experimental ventures group under other bets. These structures improve transparency, accountability, and strategic focus while allowing innovation to continue independently. Alphabet also operates through Google Services, Google Cloud, and other bets, aiming to balance innovation, risk management, and long-term values creation in the global technology industry. So for the case analysis purpose, for this case analysis, our focus is on understanding the strategic rationale behind the Google's corporate restructuring into Alphabet Inc. In 2015, Google reorganized itself into a holding company structure to better manage its increasingly diversified business portfolio. Before the restructuring, Google operated both its core revenue-generating businesses such as search, YouTube, Android, and advertising, together with high-risk experimental ventures like autonomous vehicles and life science. So this created organization complexity, limited transparency, and raised concerns among investors regarding accountability and financial control. Therefore, Alphabet was established to separate Google core operations from its experimental ventures known as other bets. These new structures aim to improve transparency, enhance managerial focus, and strengthen corporate governance while still allowing innovations to continue independently. This case analysis also evaluates whether the Alphabet structure successfully balanced innovation with financial stability, improve investor confidence, and also supports long-term value creation. However, it also highlights ongoing challenges, particularly the continued loss from some experimental ventures and questions about long-term strategic coherence.
Google operations are strongly influenced by economic factors. Global economic growth has increased demand for digital advertising, which is Google's main revenue source. In 2024, Google contributed about $850 billion to the US economy through platforms like Search, YouTube, and Google Cloud. However, inflation and market fluctuations can reduce advertising budgets, prompting Google to diversify into cloud computing and subsequent services to reduce risk. Next, technological factors are critical for Google's strategy. Rapid advancements in AI and cloud computing have shaped its innovations focus. For example, Google Cloud launched generative AI services using Gemini models, helping companies like Mercedes-Benz and apps improving efficiency. Internally, AI-assisted tools now created nearly 30% of new code and speed up engineering by 10%, reinforcing Google leadership in emerging technologies. Lastly, social, cultural, and industry forces also play a role. Google emphasizes diversity and inclusion, as shown in its 2024 diversity report, but faces challenges with reduced program funding in 2025. In the industry, Google holds over 91% of the search market, but faces strong competition in advertising from Meta and Amazon and in cloud services from AWS and Microsoft Azure. Substitutes like TikTok and Instagram and new entrants such as OpenAI increased pressures, leading Google to integrate generative AI into search and accelerated its AI-first strategies. Now we will dive into internal factor matrix. Internal analysis is essential in strategic management because it provides an inside-out view of a company's resources, capabilities, and core competencies. For Google, this process highlights areas of strength that can be leveraged for competitive advantage and weaknesses that require attention. Tools such as SWOT analysis and the internal factors evaluation matrix helps managers prioritize resources and align strategy effectively. The IFA matrix for Google shows a total weighted score of 2.89, indicating a strong internal positions. Key strengths include Google's brand reputation, which earned a rating of 4 and a worth of 0.12 due to its dominance in the global search market with over 90% share. Advanced AI capabilities and high research and development investments also scored well, reflecting Google's commitment to innovations. Additionally, its large advertising revenue base weighted at 0.15 and rated 4 underscore its financial strength. However, the analysis also reveals significant weaknesses. Google's dependence on advertising for revenue, weighted at 0.15 and rated 2, exposes it to market fluctuations. Privacy and data protection challenges, regulatory scrutiny, and employee retention issues further impact its internet environment. These weaknesses highlight the needs for diversifications and compliance strategies to maintain long-term competitiveness.
So the next one, which is the external factors evaluations metric. EFE matrix is a tool that allows us to calculate the environmental factors, economic, social, political, cultural, legal, technological, the market conditions, and also the competitions for the area under consideration. So the first one, which is the opportunities. Google is experiencing a surge in artificial intelligence, which is AI, as growth as of 2025, with advancement in machine learning, natural language processing, and automations. Google is not only enhancing its product offering but also redefining the productivity standards across the business. These factors was assigned with a 0.15 weight. This rating is 4 because Google's current strategy is performing at a superior level, specifically through the rapid deployment, such as in Gemini AI. The weighted score for this 0.60. Secondly, Google continued to ratchet up spending on technical infrastructure to meet the growing demand for cloud compute service. The weight is 0.12. The weight is critical for the horizontal diversification as users interface with money-making activities. For rating is 3 and the total of weighted score is 0.36. Next, autonomous vehicles and smart mobility, which is the internalizations of the Waymo. Google's self-driving car project in Sweden covers an in-depth a plan to expand the subsidiaries through the overseas. The autonomous technology is a high growth. It received 0.10 weight, and Google gets a rating of 3 because its current strategy shows a proactive and successful response, and the weighted score is 0.30. And the last opportunities, which is Google is driving a new era of health and life science in innovations. The weight is 0.08 and Google gets a rating of 3, which shows that Google is responding well by transforming the organization and supporting the researcher. For weighted score is 0.24. Otherwise, Google has many opportunities, but it also faces significant threats. Firstly, Google faces intense threats from both big tech and AI startup. The weight is 0.15. Furthermore, Alphabet received a rating 2 because its response is currently on the average, while the weighted score is 0.3. Furthermore, Google is currently facing the antitrust lawsuits. This factor is assigned a high weight, which is 0.15. Alphabet also received a 3 because its strategy has been above average in mitigations, and the weight score is 0.45. In addition, Google's also faced challenge from shifting the consumer behaviors and substitute. These factors was assigned with a 0.15 weight because threats of substitute is a critical success factors in technology industry. Google gets a rating 2 because Google is currently vulnerable to these substitutes. The weighted score is 0.30. The last trait is rapid industry evaluations. A weight of 0.10 indicates that cybersecurity is a middle to high priority for the technology industry. A rating of 2 suggests that Google is reactive rather than proactive, and the weighted score is 0.20.
Okay, so what is competitive profile metrics and why it is so important to the management? A competitive profile metric is an analytical tool that provides necessary information on competitive advantage based on critical success factors and serves as the basis for an organization's strategy. A CPM allows the firm's owner to evaluate their firms against their key rivals by using critical success factors. This tool helps the managers to identify the strongest competitors and important factors on a single page, as well as the areas they need to improve. So, identifying major competitors is one of the key tasks for managers who are interested in scanning the competitive landscape and developing either offensive or defensive strategies to remain competitive in the market. Okay, next we have a CPM table that have critical success factors, which are market share, brand reputation, product quality, technological innovation, financial stability, customer loyalty, global expansion, and the last one is price competitiveness. We find the three competitive, which are Alphabet, Google, Amazon, and Microsoft. In the table, we have the critical success factors, weight, rating, and score. The rating key is 4 is major strength, 3 is minor strength, 2 is minor weakness, and the last one is 1 minor major weakness. So for the first one is market share. The weight is 0.20. Google having a rating of 4 and the score is 0.80. Secondly, brand reputation, the weight is 0.15. Rating of Google is 4 and the score is 0.60. Then product quality, the weight is 0.15. The rating of Google is 4 and the score is 0.60. Next, technological innovations, the weight is 0.15. The rating of Google is 4 and the score is also 0.60. Also, financial stability, the weight is 0.1410. The rating for Google is 4 and the score is 0.40. Then customer loyalty, the weight is 0.10. The rating for Google is 3 and the score is 0.30. The second last is global expansion. The weight is 0.10. The rating of Google is 4 and the score is 0.40. For the last one is price competitiveness. The weight is 0.05. The rating is 3 and the score is 0.15. So the total of the weight is 1.00 and the total of score of Google is 3.85. The assessment of Google through the competitive profile metric from table shows that Alphabet holds the strongest overall position, which is 3.85. Its primary advantage lies in its market share, particularly in search and advertising and product quality, where it outperforms Amazon. As for Microsoft, the score is 3.65, emerges as the closest competitor, matching Alphabet in almost all categories except for market share. It is noted for high product quality and innovation. Lastly is the score for Amazon is 3.06, while highly competitive Amazon score lower in product quality relative to Alphabet, but leads in customer loyalty, which is a minor weakness for Alphabet compared to the retail giant.
For the SWOT model, the SWOT analysis of the company reveals a balanced picture of its current position and potential challenges. Among its strengths, the company enjoys a strong brand reputation that fosters customer trust and loyalty, advanced artificial intelligence, capabilities that drive innovation, substantial investment in research and development to ensure continuous improvement, and a large advertising revenue base that provides financial stability. However, it also faces several weaknesses, including heavy dependence on advertising for revenue, which may be risky during market fluctuations, challenge in the privacy and data protection that could affect user trust, employee retention issues that risk the loss of skilled talent, and ongoing regulatory and antitrust scrutiny that may limit operational flexibility. On the opportunity side, the company can capitalize on the rapid growth of artificial intelligence and machine learning, expand its cloud services to diversify business operations, explore autonomous vehicles and smart mobility initiative, in the health innovations, mobility initiative through projects like Waymo, and leverage innovations in healthcare and life science to create impactful solutions. So conversely, it faces threats such as intense competition from other big tech firms and AI startups, potential regulatory and antitrust actions. So this also can changing consumer behavior and the emergence of substitute that could affect market relevance and the continuing risk of losing skilled employees. Overall, the SWOT analysis highlights that while the company is well positioned in terms of technological capabilities and brand strength, strategic measures are necessary to address its weaknesses and mitigate external threats, while actively pursuing emerging opportunities to sustain growth and competitive advantage.
Next is revised SWOT metrics. By restructuring, Alphabet Inc. has identified the several key of the strength. The company has sustained a good brand reputation as a result of Google being a dominant and profitable subsidiary. Furthermore, Alphabet has maintained their overall artificial intelligence abilities as its strategic strengths. Moreover, Alphabet has sustained a higher amount of investment in research and development. The separation of the finances between Google and other bets has improved the transparency. Alphabet still continues to face the several internal weaknesses. The company still continues to rely on advertising as the main sources of their capital income, which is the Google still generated more income. In addition, the ongoing issue of employee retention still arises. There are still many employees who do not stay long in the organization due to the tighter controls and increased scrutiny. Furthermore, the new restructuring also led to the different cultural fragmentations within the alphabets. The feasibility of the financial loss in the other bad segments further highlight the previously occurred weaknesses in the internal financial performance. Alphabet's revised structure also presents the significant growth opportunities. For the rapid advancement and continuous growth in artificial intelligence and machine learning possibilities for innovation as far as 2025, and expansions of the Google Cloud services provide the Alphabets with a strong and also the clear strategic positioning to diversify the revenue. In addition, the continuous and improvement for Waymo. Hence, Alphabet evaluated more strategically on healthcare and life science that allow the company exercising the greatest strategic discipline. Alphabet also still faces the threats from the external factors. Competitions from big tech firms as well as the new AI startups continues to increase. The increasing in regulatory and antitrust cases filed in multiple jurisdictions pose difficult organizational risk. Also, change in consumer behavior along with the availability of the alternative technologies can harm the business model. Finally, the greater shareholder and the public scrutiny due to the increase of the transparency places them under increased responsibility to explain the expenses included in operating losses. To sum up, this case study demonstrates that the restructuring of the Google into the Alphabet Inc. was a significant strategic decision-making aimed at addressing the organizational complexity, transparency issue, and also the governance challenge that arise from extensive business diversifications. Findings from the environmental analysis, IFE, and also the EFE metrics indicate that the Alphabets hold a strong strategic positions with internal strength outweighing weaknesses and favorable responses to external opportunities and also the threats. Key strengths such as a strong brand reputations, market dominance, and also the advanced artificial intelligence capability and solid financial performance have supported the firm's long-term innovations and diversification strategy. However, the company continues to face internal limitations, including the heavy dependence on advertising revenue, privacy, and also the data protections concern, and ongoing regulatory and antitrust scrutiny. The strategy execution and also the evaluation further reveal that the restructuring largely achieved its intended objective, particularly in enhancing operational focus, financial discipline, and also the corporate governance. Alphabet's restructuring provide the valuable insight into how large diversified corporations can balance the innovation with accountability, manage the strategic risk, and sustain the competitive advantages in a rapidly evolving globally technology environment.